Hello and welcome to Weekend Investing Daily Bites. We are shooting an Ask Weekend Investing round 27 today. We've done 26 rounds before this and we've tried to answer more than 500 questions so far. Most of the queries that are there now have been answered. So I would request that people should go and see those past 26 rounds, but nevertheless we will take whatever queries are coming today. So first, the markets continued the run. Infrastructure stocks, energy stocks, public sector enterprise, banking stocks, consumption stocks were up. Metals took slight breather after a good day yesterday. So on a weekly basis, all sectors are up, which is very nice. And on a monthly basis, some are recovering, especially IT and public sector enterprise and energy stocks, which were beaten blue and black along with metals. They are yet to recover, but FMCG is racing ahead at plus 10% for the month and plus almost 7% for 3 months put together, along with autos. So autos and FMCG are the sort of momentum play right now, whereas commodities, metals, IT stocks, energy stocks, they have been much slower. So market is in a good position now, having come off from 15,000 around to almost 16,200 now. There seems to be some view that the Fed may do the hike later this month, but then stop after that. So that view is coming around. We will know only by end of this month how the commentary of the Fed is. So pretty much it is dependent upon the interest rate and the inflation parameters as we go through the month of July. Also important for the month of July are the results that are coming in for Q1 FY23, and I think that will determine a lot of movement in the stocks by the end of the month. So as I said, Nifty comfortably another 0.5% gainer, small caps up 0.25%, mid caps up 0.22%, CNX 500 up 0.46%, and so on and so forth. In terms of weekend investing performance, NNF 10 doing well at 0.84%, Evergreen doing well at 0.7%, MI50, MI25, most of them up about 0.5% or more. Some of them were down ATH was down minus 0.1%, and all cap was also down 0.03%. They are also sitting on high cash levels, 4 or 5 of them, for the non-rotational type of momentum strategies. So today's heat map, you can see that ICICI Bank did very well, Axis Bank did well, and Reliance have been muted so far, so it has not participated in this rally at all. In fact, it is very near to its very strategic support level. If that breaks, I think it will break the market along with it. ONGC has been weak. Coal India did well today. You can see some power stocks and infra stocks were perking up. Tata Motors was up, ITC was flat, and FMCG packs also, in Nestle, levers, and some gain in ITC also. So reasonably good day. Metals, of course, taking a small break here. In terms of top gainers in the CNX 500 category, GR Infra was up plus 10%, UFlex up 7.5%, All Cargo, Sobha, and SRF up 5 to 6%. Sobha came out with very good numbers and good commentary for the coming quarters. Vakrangi is down 5%, Nazara down 5%, Nykaa down 4%, Chalet Hotels down 3.5%, and CRISIL also down 3% in the top losers segment. So as I said, in the last 26 rounds, we have 530 questions already answered. If you are new to small case, if you are new to weekend investing, I would strongly urge that maybe on some weekend where you are not watching a Netflix series back to back, you can watch these 26 episodes back to back. It won't take so much time. And you will be an expert in procedures pertaining to small case, peculiarities pertaining to weekend investing strategies, how and what to do, anything will become very, very crystal clear to you. So if you are using any of our products, if you are user of small case for any other manager also, please do watch it. I think it will help you get a handle on how things are done. So we have two questions from Vinod. 531 is the number of questions. 530 is what we've answered. 531st question is here. So Vinod says, I've always pondered over the idea of how one should introduce capital into momentum portfolios. Since the strategy takes care of getting into cash and out, what's the value of having an additional layer from us to think about SIPs or lump sum to deploy? Any thoughts? So that's a good question, Vinod. There is no one right answer to this. What I would think is that most people are not able to bring in the capital when it is required, because it gets stuck somewhere else or you've deployed it somewhere else, and when you actually need it, when the momentum takes off, you are unable to get it. So if that capital has been deployed, even if it is sitting in liquid Bs and it is just waiting for it to be deployed, at least it is available there. So at least in my own portfolios, I mean, I just keep adding SIPs without worrying about, if you're sitting in cash or not and when it will take off, because I really don't know when it will. I mean, it could happen tomorrow, it may not happen for 2 years. So opportunistically, yes, you're right, you could use that capital more fruitfully elsewhere maybe, but if you want to sort of not take the pain of trying to time the cash movement and so on and so forth, you can just sip into the strategy. Next one is from Vinod again. You've always been a firm believer of hedging and diversification to non-rupee assets such as gold. Do you have any exposure to US markets? What would be your advice on how one should take international exposure from India? So I think a lot of instruments are available for US exposure. There are some ETFs also, and several platforms are available. I think Vested is one of them, Grow is another one. Several of them are available. So if you wish to take exposure to US market has a peculiarity in the sense that the taxation paperwork is different. There is a cost associated with the round tripping. So all that has to be taken care of in terms of the pricing or the the returns on it. I think one should do it. I have not done it so far because I'm waiting for more clarity on regulatory issues pertaining to research analyst licenses like the one we hold. Once we have that, we have a US portfolio model which is already in place. So once we have that, we'll definitely launch it. So, but for now we don't have it, the service. Next question is from Dr. Singh. What are the worst mistakes you've seen people do financially in the stock markets? So I think everybody learns by their own mistakes, and you have to go through that learning curve, because others' mistakes are usually not learnings enough unless you commit it yourself. So I can tell you what mistakes I have committed. I have committed mistakes of many mistakes. I mean, it's a long list, but the biggest mistake I've made is to concentrate portfolio and go into one concentrated stock more than maybe 50% of my portfolio, and that turned out to be a bad experience. Other mistakes mostly that people make, which I am seeing most of the users of small case also make, that they come in with a very short term perspective, and at the first drop of the market they are out of the market, and then they don't want to see the market till the next wave comes around, and by that time maybe it is too late again. So people coming in late to the market and getting out early instead of the other way around is the biggest mistake most people are doing. Besides that, I think the larger mistake that some of the investors are doing is to not have any asset allocation and keeping everything in equity, and once equity takes a dive, which it does is in every 5-7 years, then to live through that fear and pain and as soon as it comes back to your level, you're out of it. So all those kind of things. So not taking a approach of a process driven investment structure, that I think is the biggest mistake, and just randomly throwing darts at various stocks and hoping that some will stick, and some do stick. So you make money in one stock, and then you make a lot of money in the second stock, and then you put your house on the third one and it doesn't work. So you need to have a process, you need to have good position sizing, good diversification within the portfolio, and asset allocation overall. So all that is basically financial planning, which your financial planner can advise. But that's usually the biggest mistake people do, that getting too greedy when the market is up and getting too fearful when the market is down. Vivek has the next question. Is it advisable to pause SIPs? Answer is no. Whether it is momentum portfolio, whether it is value portfolio, if you've started a SIP with the purpose of a very long term gradual entry into the market, why do you want to time it? But if you are able to time it, you can pause it, and then once you find momentum gaining, you can bring that entire lump sum back in again. So that's possible, but then it requires your active involvement and investment, and it's definitely possible to do that. But for simplicity, I would stick to just doing SIPs and not worry about anything. Next one is from Gomisai Malt. I have been a member of ATH All Cap for last 3 years. Thank you. All recommendations of PSU stocks in last 3 years have not been profitable. BDL, BEL, BML. Can you analyze this? What happens if strategy eliminate government owned stocks? Return will increase in my opinion. I am sure there are many such stocks or sectors that have repeatedly come in but have not performed. That should not be the criteria of, if you eliminate them, will the strategy improve? Maybe it will improve, but the strategies have been tested given the the historical makeup of that particular CNX 500 or whatever is the makeup of the stocks basket that you're seeing. So please take it as part and parcel of the game. Despite having these over 3 years, I think we've done reasonably well in those two portfolios. So yeah, I mean your point is right, that if we look back and eliminate, then we are having a hindsight bias, right? Some other sector may come tomorrow, some other sector may come tomorrow. So I don't think we should be going that way. But yes, if one does a hindsight biased analysis, then yes, if you remove them, if you remove even very specific stocks, for instance, maybe Colgate Palmolive, maybe Hindustan Levers, these stocks rarely have a continued momentum. But as a non-discretionary user of momentum strategies and trends, I will not eliminate them from the study, because you never know that one stock which is going to make the entire return for you while everything else fails. So I cannot take a chance on that. Vivek has another one. What platform is better for tax filing for small cases, meaning both for STCG and LTCG? So I don't think the question is clear. Tax filing is happening for your purchase and sale of stocks. It is not based on any small case. So your broker provides you with transactions, what has been bought on what date, at what rate, so on and so forth. I use a platform called mProfit. You can Google it, and it's a free software for, I think, either portfolio up to a certain limit or number of portfolios. I use a pro version on that. It's about 5,000 something rupees on year. I really find it very useful, where you can just import all the transaction files from the broker, and they have templates for almost all brokers, and it spits out LTCG, STCG, so on and so forth for you. So I think that's a good one to have. But if you are able to do, or if your broker is able to give you the LTCG, STCG calculation separately, then maybe you can use ClearTax or some other portal for tax filing. But I think using mProfit for calculation and then using any of these portals for tax filing will also do. But do take your opinion from a CA. I'm not a CA, so this is not really my domain. Madhavi is asking the next question. Can weekend investing or small case provide cumulative XIRR for investments done via small case and weekend investing strategy? So small case has started XIRR calculations for individual portfolios. You are asking for all portfolios. That I think we will put your suggestion across to small case team, and that only they can do, because we have no access to your portfolio inputs and outputs. That is not, basically we don't have access to that data legally. So we cannot do it for sure. What we can do is we can request small case to try provide this facility in the future, and we have also provided XIRR tools in the past in the Daily Byte. So if you can use that to do a calculation for yourself, that will be great. But the best would be if the small case platform can do it directly for you for all small cases. I'll definitely put this message across to them. Next one is from Happy Soul. Big fan. Thank you very much. Thanks for all your efforts. Have 4 weekend investing strategies. All okay except ATH2. Lately, the large realized loss hurts, especially when compared against my mutual funds, which, though larger losses, are unrealized and eventually recover. So, 2 things are there. Momentum strategies, especially high risk ones like ATH, ATH2, do tend to have very lumpy returns. ATH2 unfortunately got started at the height of the market, and it has not been able to perform. I accept that. The strategy in momentum is to book small losses, and hence the realized losses go up. But if you have mutual funds which have not booked their losses and they are unrealized, I don't think that is much different, because if market goes up and unrealized losses recover, we will also make some money on some new picks. So that is not really, it is just saying that I have I'm covering my eyes and I don't want to see the reality. Today, if there is some unrealized loss in some strategy in any mutual fund, etc., it is a loss as of today. In our strategies, we are booking it. The other strategy, it's a book entry where we are not booking it right now. So, from that perspective, if you wish to move to some lower risk strategy, you could do that, because ATH definitely is a high risk strategy, and we are hoping that in the next leg up, whenever it comes, it will be able to recover most of the lost ground. So that's all I have for this explanation on the difference between realized and unrealized. Abhishek Kumar has the next one. Thanks for your efforts. I have MIMT all cap subscription for the past year. Showed good returns for the first 6 months, but now has had a big drawdown. Is it time to renew subscription now? Can you please, if one should continue to renewal or wait for market? So Abhishek, my sense is that you should come into these strategies with a several years kind of a outlook. As you rightly said, first half of the year was good, but second half was terrible, and that cycle can happen. One can come at the top and then you have to play that cycle and hope that the market will go up again in a couple of years. So my sense is that you should continue with a longer term view, because it is not an opportunistic, it's not a strategy which is designed for that you come in right now and then 6 months later or 1 year later you can leave, and then you can time it that way. So my sense is that you should renew, but if you wish to wait, you can wait, and as soon as you find that markets, because see, one thing is there, I at least cannot make out when the market has started going up. Like currently, if we are seeing a slight move up, I don't know if it will go to 16,900 and drop to 14,000, or it will go to 16,900 and go to 18,000 after that. I can't say. So I can't time it. If you can time it or somebody else can time it, I think then of course one can wait and time it accordingly. But my sense and my purpose in all these strategies is that the user should relax at home, do their own uh, be focused on their life and work, and not worry about the markets, because the markets, once a week you will rebalance and it will take care of itself. But by being very actively involved in the strategy, you are essentially not getting the benefits of this low pain strategies that have been designed. So that's my sense of it. Shubham Mandal has the next one. You had promised to start a strategy based on US markets by the end of last financial year. Anything on that? So as I think mentioned earlier, we are waiting for clarity on regulatory issues. So research analyst license and RIA license in India, already there's so much of confusion around it, and to add to it a US strategy is going to be very, very difficult. So we will wait till all this clears out and there's a clear path for regulate, because we definitely don't want to do anything which is sort of gray area and regulation. So while some of the managers have started doing this, but most lawyers advise against that. So the strategy can start as soon as the regulation is clear. Alpine Investor has a question. Do you have plans for a new model portfolio or new monthly rebalance portfolios? So yes, we have some plans, but I will not be able to share more on that. So a monthly rebalance portfolio is going to come soon. Let me put it this way, and I'll announce it much ahead of its launch. Next one is from Ashwath. Is it possible to use your trading system to use it on a daily basis rather than hourly? I wouldn't get time to see the messages every hour. So if you can give something similar to Stairs, but on a daily basis, it will be great. So while the idea is definitely doable, we've run a lot of tests in the past before we closed in on the hourly system. Is that the drawdowns even become much more steeper in a daily basis strategy. But yes, I mean, with options and with some other hedged positions, we can try to create some strategies which can be used on a daily basis. But right now, I don't think the current strategy can work on a daily basis. So for now, I would have to decline that we have any system for a daily use. Next question is from Mr. Abhishek. Thanks for making investing an easygoing task for us. Thank you so much, Abhishek. I would like to know about opportunistic SIM in momentum investing. Should we do it during correction or during market rise? So opportunistically, if you are looking, then you should come in while the market starts to go up. But as I just said, it's very difficult to predict which rise is going to become a larger leg upwards and which is just a bounce in the market. So opportunistically, yes, it is possible to do it. How to do it is something that I haven't figured out. I hope that answers your question. Ayush Jain has the next question. Hello, in a market like this where many shares are trading at discounted rates, including good blue chips, how does momentum investing help? Since this strategy goes after momentum, will it only target the above after they start doing well? So yes, Ayush, as the name suggests, momentum investing will start investing in stocks only once there is significant momentum identified in those stocks, and if the stocks are falling or if they are going on a sideways mode, then the strategies will not pick those stocks. So while value investing or other growth investings will do bottom fishing for stocks, good blue chip stocks at low rates, momentum investing will not do that. And while it is a disadvantage to not pick at lower rates, but the advantage is that you are not buying falling knives which may hurt the portfolio even more. So you are always buying strength in the market and you're never buying weakness in the market. So weak stocks are never bought, strong stocks are bought. Some of them will do well, some of them also will not do well, but you also have strategies to exit out. So that's how the strategy works. I hope that makes the query clear. Bhupender Singh has the next one. Does NNF 10 completely exit from a stock while it is in profit? Been a subscriber since October 21, and on each rebalance it eliminates only stocks which are in loss or lost all of its gain. Can you do a DB to show all the losers and winners since inception? So we cannot do the losers and winners since inception on DB, because this is a private small case. We cannot make it public. But yes, you have an option in the small case app to go see all the rebalances in the past. And to answer your first question, it rebalances every month to equal weight. So if you start 10 stocks at 10% each, and by the end of the month, if one stock is at 15% of the portfolio, it will be set back to 10%. And that 5% additional gain that it has got over the month will be redistributed across the portfolio. And if some stock has gone out because it has fallen in the ranking, that stock will definitely go out. So I hope that answers your question. If not, do send us a mail and we'll explain it more. Vinay has the next one. Do you consider momentum in the underlying benchmark indices for deciding when to buy, and by how much a strategy goes into cash? So the answer is no. Sarvesh has the next one. Hi sir, I invested in NNF 10, ATH2, MI20. Last 3-4 months, I see we have booked losses very frequently in all products, especially ATH2, MI20. Some stocks, in fact, added just for 1 or 2 weeks and removed. To recover those, we need double profit, which is difficult. So, Sarvesh, while I agree that last many weeks have been difficult, in fact, it has been very difficult since last September. But this is how the nature of the momentum strategies are, and as and when there are longer trends, we will get easily trends where we will double or triple in stocks also. So that is not really a concern that stocks will not perform. But yes, while this chopping around goes on, and while the market goes down, yes, we can get hit for some time. So this is part and parcel of the the overall strategy, that we will get hit for some time and then we will make some hits. Vinay has the next one. I think we've already covered that, so maybe we have taken it twice. Last question is again a repeat, so I'm sorry for these repeats, but I hope all the queries that were raised on Twitter have been answered. If I missed some queries on Twitter, please excuse me and send us the query on mail, support@weekendinvesting.com. We basically want all queries to be answered. We don't want any user to have any queries remaining unanswered or unexplained. If you have any doubts, anything that you wish to clarify, or any process of execution that you wish to clarify, please don't hesitate to send us mail. We will send you a return mail within 24 hours of your email coming in, and hopefully that will make you more comfortable and more confident about the processes or the strategies that you're following. So thank you so much for being a weekend investor. Thank you so much for watching these videos, and please do share this with other people who you think may benefit from it. Thanks. Bye.